Hello friends, checking in on the markets. We've got SPY with a gap up open, and right now here on stock charts they are adjusting for the dividend. So we had quadruple witching on Friday, and that came with a dividend distribution for SPY. So there was an artificial change in prices, and I don't really like these days because it does change the chart artificially. So I was watching SPX to get a good guide of where we stood relative to the previous days of trading. But again, now it is adjusted. So we did gap up to an all-time high. And then we saw consolidation, and again, any consolidation on this daily time frame from this point on above 287.73 just keeps those bulls in absolute full control. And rather than using the price levels that are very clear, you could even use this daily middle Bollinger Band, which is ascending fairly rapidly. And if we lose that level, that would be a red flag of some potential further significant consolidation for the first time in a month plus. So that's a general guide to be watching, but the higher lows are what I'm going to be watching. And we have the FOMC on Wednesday. So Wednesday, we're going to have some volatility with the dollar and with gold, and likely an impact on the markets as well. So that's an event to be keeping an eye on. Weekly chart extremely strong, still riding exponential supports at this point for the last 3 months in a row. No sign of any slowdown in the markets. IWM saw some profit taking as well, and it's all about this level of 171.93 because we did break the lower highs by breaking that level, but we didn't see any follow through, and we're now struggling just under that level yet again on Friday. So I need to see a clear break of 171.93 to be looking back at the all-time high. Otherwise, we're looking at the low of consolidation to this point of 169.07. IWM is the weakest of the three markets right now, and that's certainly relative because if you show me this weekly chart, I would say it's an extremely strong chart. There's just other extremely strong markets out there. So QQQ did get the bull break of this daily equilibrium pattern, but I'm always a little bit cautious, and I take it with a grain of salt when breaks occur pretty much with pre-market action, and then we open above key resistances. Because this example pretty much perfectly, we open above those resistances. That doesn't mean we're going to break out, and we saw profit taking from that follow through. So I would much rather see the breaks of tight ranges occur during regular trading and regular volume rather than a little bit of, fake action, so to speak, without volume proving it. So that's something that I will always keep in mind when I am playing a break. So we're watching for anything above 181.17 to maintain a higher low, and there's clearly a wall of resistance here at 185. The bulls really want to close over that level to be looking back towards the all-time high at 187.52. So some profit taking, but the weekly chart still trading sideways, still holding on just fine, and it's going to require a clear break of 181.17 to shift momentum, just like it's going to require SPY a clear break of 287.73 to shift that momentum. Financial sector saw 2 huge days on Wednesday and Thursday, again, leading up into the FOMC. No doubt that is a factor. And we're looking at healthy consolidation now, so anything on the daily above 27.94 will maintain higher lows and keep those bulls in full control. No red flags at this point. Healthy consolidation, rejecting from the weekly upper Bollinger Band, which the bulls have clearly struggled with over the last 2+ months. The next major resistance level is 29.44. We got up to 29 even. VIX on the daily chart, some lower wicks of bulls buying the dip. We did see a clear bear break of this equilibrium pattern with the market strength we've been seeing. On any bounce for VIX, anything under 13.75 is just a daily lower high, keeping those bears in control. And support right now is 11.10 and then down to 10.17. Weekly time frame, exponential resistances, still watching very close because these Bollinger Bands are tight. And in the past, when these Bollinger Bands have gotten tight, it has led to some bullish action. So I am keeping that on watch. And we'll see if that plays out sometime in the next couple of weeks if the market gets a bit more further consolidation and a bit more volatility to cause VIX to spike as it has in the past. So something to be aware of with those Bollinger Bands on the weekly time frame. So that's where we stand as we head into tomorrow. Again, Wednesday is the big day for the FOMC, and hope you have a good rest of your Sunday.